We'll do a proper introduction to this session. Welcome to our mortgages session, where we're going to be talking about everything from the basics to freelancers, having your questions answered. We've got some fantastic financial experts with us this evening, Serena and Ruth. We're going to do a proper introduction soon, but this is one of the topics we've been asked about many, many times. So here we are delivering. You asked, we delivered. Here it is. You've got plenty of opportunity to ask your questions as you go. But one of the first things that we wanted to do was just find out who we've got with us in the room this evening, because that's going to help us just understand a little bit more about how we can answer your questions best and how we can make sure that we're making the content fit you too. So the options that we've got on here are whether you're employed or whether you're a locum, whether you've got a mortgage, you're just curious to know more, you've not got a mortgage, you partway through an application, maybe it's that you're thinking about remortgaging. So I can see at the moment, the majority of people that we've got here are, I'm employed, no mortgage, but curious to know more. We've got a couple of locums, no mortgage, but curious to know more, and other, let us know in the chat. So if you are that other one, please do let us know in the chat box so that we can see who else we've got, who we've missed off the list. But I can see 63% of people at the moment are employed, no mortgage, curious to know more. So you are in the right place. And I can see plenty of you telling us where you're dialing in from as well in the chat box. So please do keep that interactive, because these are really open sessions. This is your time, have your questions answered and learn a little bit more about zoning into that financial freedom and that financial independence. So I am going to stop this poll now. Amazing. And we'll get started with the session. So a brief introduction to us at VetU. We are a team of 4 veterinary surgeons. We've come from completely different backgrounds within the profession. You can see on the picture here on the right, there's Matt Dobbs, there's Paul Horwood, Ebony Escalona, and myself, Katie Ford. And really VetU was started to help introduce veterinary professionals, whether veterinary nurses, veterinary surgeons, reception team members, ANAs, ACCAs, practice managers, to financial professionals, because we were never taught this stuff. And actually, when we've got this in place and we can work towards a financially independent you, a financially independent us, means we've got those cushions in place if anything does happen, particularly in the profession that we work in. So we really do focus around 3 key areas: looking at protecting your health, protecting your income, and protecting your future. And out of that, in financial conversations, we've also branched into lots around accountancy, helping you keep under control with that side of things, and also just trying to help you get that education around these topics that maybe we weren't taught about. So let's take some pressure off ourselves. We weren't taught this in school, and certainly I know a lot has changed over the years in terms of how much education we get when we're at university around this stuff as well. So we introduce you to fantastic financial professionals, people that have done their training, know their stuff, to have your questions answered, and people that know this profession as well. I know the experts that we've got on this evening. We've got Serena Smith, who's a mortgage advisor that we're thrilled to be joining us for the first time. Her cousin is actually a veterinary nurse, so she's got some insights into this space. And we've also got Ruth Downs, who is a financial advisor that I know is a familiar face to many of you. And Ruth has worked with probably over 200, probably a little bit more than that now, Ruth.
I think it's near 300 actually now.
Wow, vets and vet nurses. So
yeah,
you are in good hands this evening. You have people that understand this profession as well. So I will hand over very shortly to Serena, who's going to be leading the presentation. She runs mortgages with Serena. She'll tell you a little bit more about herself, and also she'll be running through some basics, touching on some of the questions that we've had submitted. But as we go, there's plenty of time for you to ask your questions. So that was a little bit about us. Now, a little bit about how we're going to roll this evening. How is this session going to work? The first thing, just to reiterate, is we're really supportive as a community. You know what? There are no stupid questions. So if you're wondering it, somebody else on the call is probably wondering as well. Nobody is going to call you out. Nobody's going to say, why not don't they know that? Please do ask away. Just like Paul's popped in the chat box, you can send Paul or I a question anonymously if you'd like to, by just selecting our name in the chat box. That means no one else sees it. But to be honest, you're probably not the only one, even if you do want to ask something. And just bear in mind, sometimes, like with our own patients, the answer can be, it depends. It depends on your circumstances, it depends on your history, it depends on a number of factors. So we're going to be doing some top line educational advice. There will be questions that can be answered on this call, but there might be some that you find that Ruth or Serena say, you know what, I probably need to know a little bit more, just like would happen in our own practices. Please do call out any jargon. If you're hearing abbreviations, you're hearing terms, you don't know what they mean, they've just been casually said in the same way that we say surgical terms and everything like that, and actually they haven't been explained, call them out. We do give money to VetLife every time that happens. So let's get them some cash. If you hear a term, an abbreviation that you want explaining more, get it in the chat box. I will call it out and we'll get you a full definition. We'll then have a quick presentation. Well, it's not a quick presentation. We'll have a good presentation that's not that quick with Serena diving into all those topics that we've spoken about. Ruth is also on board to answer questions. She'll be in the chat too. If there's anything that you want to ask that is away from mortgages, that perhaps is on any of those other topics, or we need to bounce back to Ruth because it's more specific on that topic, we are thrilled to have Ruth joining us this evening as well. Then we have plenty of time for questions and answers at the end as well. I'm going to be keeping an eye on the chat box. If there's anything that comes up relevant to the thing that we're talking about in that moment, I will be there to call that out, to ask that question. But if there's anything that you want to pop in at any point, we can always have a good look through at the end as well and see what's there. So thank you very much all for being with us this evening. It's my pleasure for me to hand over to Serena Smith, who is a mortgage advisor. She is going to walk you through the basics, including a little bit around freelancers, and answer some of your questions. So Serena, thank you so much for being here with us this evening and sharing your wisdom with us. We are so looking forward to knowing a little bit more and having some questions answered.
Well, thank you very much for having me. So a little bit about myself. I am a mortgage and protection advisor, and I have been in the industry for 6 or 7 years now, I think it is. Started off as a Saturday girl in an estate agency. Started off just answering the phones, answering questions, and they quickly got me out at properties, and I was showing people at viewings. Didn't know anything about the properties, but I had the personality, so they enjoyed me being there, and that's kind of where I got a taste for property. I then started working directly at lenders, and that's where I sort of cut my teeth, as it were, with regards to mortgages. I already owned a property by this point, and as I was saying with Katie earlier on, I didn't have a clue. It didn't matter that I'd already bought a house and that I'd been living in it for 5 years. It was still absolutely foreign to me, and I think for a lot of people it still is. Just because you have those keys doesn't mean it's any easier. So please, as Katie said, don't feel like any questions are silly. They're not. I'm still learning stuff. Things are still changing. It's a continual progression with the industry, and just like the rates, things go up and down. So I am here to try and help with as many different areas as possible. We've had some questions, so I'll answer those. Alison, I've seen yours, so I'm going to cover that one as well. So do feel free to call me out as well on the jargon. I do try my best not to. It's one of the things I pride myself on, but it does slip in there now and again, doesn't it?
We've got you on your toes this evening. We've got you on your toes.
So if we can move on there, Katie, please. So tonight I'm definitely going to try and cover the home buying process for anybody that ticks that you don't currently have a mortgage. I'm going to cover affordability loosely. And obviously income is quite a big one for this industry because there's different types of income that you can have. It might be that you're employed, different areas as well. It might be that you're on reception. It might be that you're a vet nurse. There's all sorts that creates the amazing service that you guys put out, and that I am one of those people. I am at the vets probably more than I'm at the doctors with my Friday afternoon dog. So I literally value you guys so much. So I'm here to try and help you as much as possible and answer as many questions as possible. So if we can move on there, Katie. So the home buying process, it isn't a case of jumping onto Rightmove, which is what most people do, and then find their dream home and go, right, now I best do something about being able to pay for that. The best way to go about things is to find out what you can afford first of all. Now, this is by acquiring what we call a DIP, an AIP, or a MIP. They are short for Decision in Principle, Mortgage in Principle, and Agreement in Principle. They're all the same thing. Now, I get it all the time where people are like, oh my God, the estate agents asked for an AIP. We've only got a DIP. And I'm like, they're the same thing. Do not panic. It's all where there's been potentially a soft footprint or maybe a hard footprint on your credit file that the lender, I've put in some details, or they've looked directly, depending on which route you take, to find out, are you potentially someone they would want to lend money to? Really high level stuff there, guys, asked. It's things like, what type of income? Is it self-employed, employed? What kind of credit commitments you already have and that will be ongoing. It's not just about things that are at present. Some things can carry on for quite a number of years. Loans, for example, could be that you got a hefty amount on a credit card. So they will look at all these things really high level. So we're not even looking at the property at this time. We are literally just looking at you high level. Once you've got your decision in principle in place, you can then, when you go to a viewing, make an offer on those properties. So the next step following that would be that the lender would accept it, fingers crossed. So that's what we're always hoping for, but doesn't always happen. I have a number of clients who are looking at whether they can move slightly out of the area. There's lots of things that you want to consider as well when you're looking at properties, and travel is one of the questions that I was posed, and it is something that will be looked at. But obviously I appreciate that sometimes you don't live anywhere near the practice or the surgery that you're working at, so we can definitely discuss that in more detail at the point of having a meeting. Once your offer's been accepted by the vendor, congratulations. I would then, or the bank would then, do the full mortgage application. Now, this is when we get into the detail. This is when we look finer into your spending habits, what type of property it is, because criteria isn't just about you, it is about the property. So some lenders, for example, will not want a cottage with a thatched roof. That's just not for them. So it's something that they will look at and they'll ask me more questions on. Once we've submitted that full mortgage application and any supporting documents that they require, this is when the underwriter at the lender is going to start looking at things like, does your pay slip add up? Is the year to date equaling what it should be? Is your net pay equaling what it should be if we divided those figures? They're going to really dive into things, and they're going to look at potentially your bank statements, like, where's your spending going? Are you heavily betting every month? All sorts of different things are going to be looked at and considered, and then underneath all of that, once a day it would happen all at the same time, but now things are a bit slower, so I will give you the heads up, things are a bit slower at the moment. The valuation will be instructed, so when everything comes back, fingers crossed the valuation stacks up as well, so it comes back at the value we've predicted, i.e. that's what it was put on the market for. You'd then go to offer with the lender. A question I was asked earlier on today was, how long does a mortgage offer last? And that can be anything between 6 months initially on a standard pre-loved property, shall we call it. If it's a new build, potentially they might give you a 9-month offer, and then you can have an extension of up to 3. But if it's a 6 one, there'd be an opportunity potentially to extend by 6 months. So that's 6 plus 6 always equals 12. But these will mean that you'll have to do usually a new payslip or proof of income and a new bank statement, just so that they can see you didn't go out and buy a Lamborghini in the interim, which, believe it or not, some people will go crazy. I did a post on this earlier on, like, don't do anything rash until you've secured the offer, and that's when your solicitor would then kick in. They're going to do all the searches, ensure that everything is okay for you to buy this property. I know it seems like the hardest part of the journey because it feels like forever, but you want them to do a good job. You want to know what's going on in the background. Is that beautiful field that you were planning on walking your 5 dogs on now going to have a new build site on it? You don't want that. So let them do their work, let them do the research that they're required to do. Now, the only form of insurance you legally have to have in place for your purchase is buildings insurance. That's part of the offer, it's a condition of the offer. Now, it's not what I would like to just sit there with. Obviously, as I've caveated at the bottom of the slide, I also feel it is very, very important to have your life insurance, critical illness cover, income protection. And if you're getting your buildings, you might as well get your contents, because let's face it, it's sad if your house burns down, but it's never the house burning down, it's the stuff inside the house. So I would say that's really, really important. And I know that it can be costly, and there have been previous Zoom calls on this, but it's really important, especially you guys. You work in jobs that potentially could end up with you having a hefty amount of time off. I know I've been stood on by a horse in the past, and luckily I was only a kid and I was still at school, so that's fine. But had I been an adult, I probably would have been off work for a lengthy amount of time because my foot was completely crushed. So I appreciate that, it's cost and worth, but with this one for you guys, it's definitely worth it. And then it's the best day, it's completion day, and that's when you go and pick up your keys. So all of that bit beforehand has to happen in order for you to pick up those keys.
And Serena, we've just had a
Yeah.
quick question
Oh,
come in
yeah.
Anonymously, just saying, you said it takes longer than it used to do. Is there like an approximate length from beginning of this process to getting the keys?
It's how long is a piece of string kind of question at the moment. It depends. It really does depend. Now, are you buying a new build? That in itself can just be because we sadly live in Britain and it rains all the time, or 90% of the time. So things like that can be put back. I would say it's important to know that if it's a new build situation, most of the new build firms have an end of year of October. So if you have been told any day up to October, chances are you're not going to run over that. But let's say, for example, you were told June, you could go up to October. Just something to be aware of. But if it's after October, you've still got the next year to run up to October. They're never going to let it run over that length of time because it's not worth it for them. So just something I know, but I didn't learn. It's just something I know because I worked direct for the lenders and we had close contact with the new build firms. So
good top tip. And we just had
it's just a standard though. Sorry,
go on,
like a pre-loved or a property that you're looking to purchase, 6 months potentially, and that's purely because when you think of your solicitor, you think of just them doing one job. They have lots of third parties that they're liaising with, and the searches. I believe I was speaking to a solicitor friend the other week, and there was a county council down south that were taking 170 days, 170 working days to do the searches. So they are under the cosh. Home buying's through the roof at the moment, and that will have a knock-on effect. Most of my cases, sadly, as much as I can push, are going to the wire. So we're at the point where we're considering a mortgage offer extension. So it's very, very slow.
Okay. And we've just had another question that's come along just as you've been talking there as well, Serena. And thank you for explaining that so well. What actually are searches? Like, I know I was quite surprised by these when I bought my house. I was like, you have to check for this. But if you could just give a quick overview.
So there's all sorts of searches. And it's important to note that you can speak to your solicitor. So when you get your quote from your solicitor, for example, you could say to them, do I need all of these searches? So there might be a coal mine search. There's searches, like I said, about onward purchase, like onward builds and things like that. They'll look at crime rates. They look at everything that your brain probably doesn't even think about, I would say. And there's a variety, but you can say to your solicitor, do I need all of these searches? They will automatically throw them all into the quote, but sometimes they can go, well, actually, no, I've done property purchases in this area and I know that isn't applicable. So do push back. At the end of the day, feel empowered to question whether you need those or not.
Oh, such a good insight. Thank you, Serena. And finally, just before we do move on to the next one, somebody has just asked on terms of the valuation itself. So if they go ahead and they give a valuation and actually it's significantly less than what it's been on the market for, given that property prices are very much all over the place at the moment, yes. What happens then?
So it's happening a lot, is what I would say. So don't panic if it does. Depending on who you speak to in the process, an estate agent might call it a down val. I'm thinking it's more of a realistic val at the moment. Obviously, val short for valuation, but I would
called out.
I would say it is. It's just basically that the way that the properties have gone up has been like this for the best part of the pandemic, and we are kind of coming out of it, aren't we? But now it is starting to slow off. I wish I had the ability to draw this for you, but because some estate agents are thinking it's still going at high, it's actually lowering off. The lenders then potentially send someone out to do the valuation. They don't always. They could do an AVM, which is an automated valuation mechanism, I think it's called. It's basically one that they do on a computer. They don't go to the property.
Oh, okay.
And they can then go, well, actually, based on the last 3 months, 6 months of buying and selling, this is more realistic. And so, like I said, the estate agents might call it a down valuation, but I think it's just that they're being more realistic.
Yeah.
I, for my clients, will always run an AVM. And that means I'll go back to them and I will say within the chain of estate agent and the client, and I will say, I don't think this property is going to get valued at that, just so you know.
Yeah.
You might want to warn the vendor and see how they feel about it. And 9 times out of 10, I've not been wrong, which is good. My client knows that I'm doing the right thing, and it's because ultimately it throws back on myself if I don't have to. It's not all brokers have access to these types of tools either. But I think it's really important that my client knows it's not me. If the valuation isn't right, I think it's important that they know that I've got their best interest at heart. It's important to remember, guys, that the estate agent has the vendor's best interest at heart. They're working for them, not for you. So they're not going to look after you. They're going to look after the vendor because it's them that's paying them, not you. So really important to think about.
Another top tip. Thank you, Serena. That makes total sense. And yep, someone's just messaged me back and said thank you. That's brilliant.
All right, super. So obviously we started with the journey, but the really important part of this is affordability. Now, I've put an average of 4.5 times your income. If you are fortunate enough to be on 50k or more, you might be able to sort of essentially unlock the ability to have 5 times your income. So essentially, that's not jargon, it's really simple maths. Let's say, for example, you're on 30 grand, you literally put in a calculator 30 times 4.5, and that is roughly the figure that you might be able to lend. Now, as I've mentioned, that is excluding any current or ongoing outgoings. So it's a rough calculator, but it kind of helps you sort of ballpark those figures. With regards to affordability, I've put in there because obviously I know that low coming unlimited companies and umbrella companies, etc., are quite a large part of the population in this industry. Now, it's important to note that locum isn't sort of like a term that's generally used by lenders. However, obviously self-employed, limited companies, 0 hours are. And all of those, generally speaking, now there's 100 lenders on the market, so I'm having to be quite generic with my terminology. I can't say, well, we'd be here all night if I looked at each individual one, but generally speaking, they will want to have a track record of 12 to 24 months. I always hear you need 3 years accounts. You don't. There are lenders that will take 12 months accounts. Bear in mind that their criteria is then a little bit more strict because there's nothing really telling them that this is going to carry on being successful, although they might ask for what we call an accountant certificate. So that is literally your accountant answering a PDF set of questions. I say a PDF, some of the lenders are quite like old school, it might be a spreadsheet, but generally speaking, it's a PDF document that they will then say, can you answer these questions? Bit about yourself, obviously, how well the company's done thus far, what do they predict going forwards, and have you been affected? Obviously, we all know COVID is now questioned, so there will be 1 or 2 questions around that as well. And that's kind of how we can unlock if you've only got 12 months. It could be that, fortunately, like myself, well, the long story in my history of employment, but basically I went from being employed to self-employed, and that meant that I had a terrible first year because it was literally 2020, but things have progressed. So if I wanted, for example, to do an onward purchase, remortgage, etc., I'd probably get my accountant right now to do an accountant certificate for me because things are improving. So I wouldn't want them to average the last 2 years because they wouldn't be a good average, and they actually wouldn't tell them how well I am doing and how my affordability is much better than it was in 2020, thankfully. So generalising, I would say 12 to 24 months. It's lender specific, but this is why I would say speak to a broker, because I can then go whole of market and go, right, okay, Katie, for example, has come to me. She's just started her company. We've got her first year's accounts, but we're in July now, well, almost August, and I can see actually her company's doing really, really well. She's growing from strength to strength. So I'm going to look for a lender that will look at the 12 months and an accountant's certificate. That's my job. I go out and I look at what is, I've got to be careful with the word best. How do we quantify it? But how will they look at Katie, and how can I paint the best picture about Katie? So general, I would say it's 12 to 24 months, and general, again, about 4.5 times for working out what your income will be. But once you've spoken with a broker or directly with your bank, they will pinpoint an area of how much you can actually afford.
Serena, I've got one question. Do you want to explain what whole of market means? Because I know it sounds quite simple, but it's a part of the language that we use, isn't it? And there is a difference. I'll leave it to it.
So your bank is tied. They only have their own lending criteria, affordability, their pot of money. They only have that because they are tied to that. So let's say, for example, Ruth came to me, wanted a mortgage, and she said, she went to the bank, she went to Barclays, for example, and they said no for whatever reason. And sometimes they'll tell you, sometimes they won't, but they're not about to go, but by the way, hon, Nationwide will do it. Don't worry about it. They are literally the Tesco and Sainsbury's of hating one another type situation. They're not going to tell you who would do it. That's where I come in. I'm whole of markets. Well, I have a whole of market offering, so I can look at all of the lenders, even the ones you've never heard of, like Earl of Shilton, things like that. And that means that I can find out your circumstances and find out then who the right lender and which product they're offering is right for you. You've also then got in between these two big, I'm trying to get in the middle of my square, two big variants, so one or all, you've then got what we call multi-tied. Now these are what are or panelled. Again, they're all what they phrase it. Some of them are very, very clever as brokers, how they word this. They don't quite say anything because that way you don't really know. But previously, when I worked for a brokerage called, for a network called Just Mortgages, I was panelled. I didn't have access to all the lenders. I could only access their preferred lenders. So something really important to look at and to find out, because sometimes you're not getting a whole of market offering. You're getting, I think I had 50 lenders when I worked for them, and that's half of the market. Wow. So it's really, really important to know that you are literally speaking to someone who can offer that.
So interesting, isn't it? It's a little bit like, I guess, when we're getting our car insurance as well, isn't it? That you can go on a comparison site, but sneakily some of them don't tell you that this is only going to be like 30 of the providers or 50 of them. And having someone that knows the ins and outs. And we've actually had another question, which someone has put, this is an embarrassing question. It is not, because, you know, this is why we call this stuff out. Like, which person is the broker? Is that you, Serena?
Me.
Yes.
So it goes bank or building society, for example, because there's a lot of those, and they're usually the ones you probably haven't heard of, and they have amazing criteria. I would say for this industry, they're probably the ones that will love you guys, because they love to find out more. They love a story. So they want to know, like, okay, Katie started off working on a Saturday in her local veterinary surgery, helping out on reception. She loved it, went to college and did animal care. She then went to university and qualified, and she then was employed. She then went on and started a sole trader firm. She then went on to be limited. They love that because you've just progressed. You've just gone through the natural progression. So I would say they are the top. They're who I'm asking, will you lend my client some money to? And I am the broker who goes out or an advisor. It's the same term. A broker, I think, is quite an American term. So if I was on Selling Sunset, I mean, you can choose, who would I be? Chriselle, maybe?
Oh, I love that. And just quickly, another one, Serena, as well, just adding on to that, 4.5 times your income. If there's two of you going into mortgage together, presumably that's added together and 4.5 times that.
Yes, perfect. It's a really high level calculation, but I would say if you're just not quite sure, and you do want to kind of look at Rightmove to maybe, like I said about the travel sort of situation, it could be that you're just going, right, okay, well, we'll get a rough idea of what that means. So you could go and sort of suss it out, I guess. But the right thing to do is to get that decision in principle. Also, just about decision in principles, again, they last anything between 30 to 90 days. You don't need to keep getting them unless you've changed your income or your outgoings, in which case then maybe get a new one if you've not found a property within the time that it expires. But I would never go back and do another one for my client until, we were ready to actually submit a full mortgage application.
That makes sense. And again, like, I imagine there's nothing more heartbreaking than getting your heart set on a property and then not having any of that in place and realizing, oh, it's already gone because I didn't go ahead and get this in place. Oh no.
I didn't know the journey. So as I say, I have been in financial services. It's probably longer than 7 years. I think I've been saying 7 years for 2 years because of the last 2 years. But I'm on shared ownership. So if anybody wants, like a bit more information with regards to schemes, really high level, shared ownership means I own 35%. You can own whatever, usually over 25%. But I own 35% of my property. I pay rent on the other. And I didn't have a clue, hence why my mum told me to go and speak to a broker. There's a limited pool of lenders who actually offer shared ownership. And it was a scary time, and I'm fingers crossed approaching the part where I would like to staircase to 100%, which means I'll just own a standard residential mortgage and I won't pay rent on my property anymore. But yeah, there's a lot to consider, and I lost the first one because I found out on my credit report that I had a default. The bank had never told me they'd put it on. It was on there incorrectly. They had to go to the financial ombudsman. The bank itself has 8 weeks to consider my complaint. The financial ombudsman have 16 or 18 weeks. Basically, the total was 26 weeks. And on the day the bank were made to lift the default and pay me compensation, somebody else got the property I was looking at.
Oh no.
So this is why I say over and over again, get your ducks in a row. Don't just assume that what's on your credit file is correct. The best thing you can do tonight, if you haven't already, is go away. I'm happy to send out my link for Check My File, and feel free to email it over and we can have a chat about it.
Amazing. And another good top tip, and just akin to that, actually, another question in the chat that rolls off that nicely is, how close to being ready to buy do you have to be to get a DIP, AIP, MIP?
It's a really tricky one. So I have some clients in Birmingham at the moment. I'm from, if you can't tell, a place near Burnley. I'm from the Ribble Valley. And so I don't need to be near anybody, by the way. It's totally digital, totally virtual. And bless them, I literally love these two. They have been looking now for 18 months. In the time that we've been talking, they've actually had a baby. So their affordability has changed, but she's also had a promotion and he's on a better day rate because he's a contractor. So lots of different criteria going on there, and it's all been a bit muddled. So they had a dip back then. We didn't do a new one till baby was born 3 weeks ago, I think it is, and her new income had kicked in, so I had a new wage slip. So I would say if you're starting to think about it, get one. Don't wait until, like I say, you find the dream property and then find out that it's just not affordable. You don't know what you're looking for until you know what you can afford, really, because that can change so many things for everybody, not just this industry. But I would say, how close to being ready? You don't know you're ready until you've got one.
Good shout. And I think all of that just feeds back in so nicely, Serena, into how valuable it is having someone on your side and on your team. And I know you're going to talk about that in just a second, and we've touched on it a little bit already as well. But just there are so many intricacies, like you said, situation changes, and to have somebody on board that can say, hey, heads up, this might affect things. let's do something about it, rather than us learning that further down the line is worth
which
it.
can be a hard time to learn it. As I experienced. So this is why I do what I do, because it did affect me. It did cause a lot of upset, because I would have loved that. But third time lucky, I'm in a home that I love, and I've been here nearly 11 years now, so it was worth hanging out for, definitely.
Amazing.
So I'm going to talk now about going direct. So going direct means going to your bank or building society. Most banks or building societies are what we call high street. So the likes of NatWest, Barclays, Skipton Building Society, something that you would probably have walked into and gone, can I open an account? So going direct means you only have access to their lending criteria and affordability. As I said before, they're not then going to turn around and say to you, but just by the way, I know we won't lend it to you, but I know that Skipton Building Society will, for example. They're never going to do that. They're their competitors, and they don't need to know that other lenders' criteria either. Just a heads up, I think the dog might bark.
You're in the right company.
So
it's fine.
Yes. So as we discussed, the variety of brokers, whether they're multi-tied or panelled, they're the same thing, or whole of market offering. So when you come to someone like myself, I'm a whole of market broker. I literally will learn about you, like you guys would learn about a pet. You want to know the history, you want to know the goals. Like, someone comes to you when their pet's unwell, what's your goal? Is it that you want to prolong the life? Is it that you just want them comfortably to pass? I'm asking those details about you. So is it that you are buying a house for the short term, like you're going to be in the post that you're in for 2 years, or is it that actually you're buying your forever home because you've been in this surgery for some time and you know that you want to set some roots, you've been renting, etc. Is it that you're wanting to buy a buy to let because you know that actually in this area, although you might move, you've got the potential to rent out to multiple staff, maybe, whatever it might be. There's all sorts of different ways of looking at things, but I will get to know the bones of you. I will know that if you come back to me and you go, we're looking at a new build, and I'm like, oh, that's funny, because you told me that you wanted something with character and that you really wanted to do it up and make it your own. And I'll ask, like, what's changed your mind? Because I don't want you to just rush into it. I had a client, for example, earlier on this week, in fact, it's only Tuesday, so it must have been Monday, who said to me, the solicitor's been badgering me saying, can I afford more? I said, well, you need to ask yourself the question, do you want to pay out more? You could definitely afford more, but what we're working on is something that means you can still have holidays, you can still do things with your friends at the weekend, you can still do things on your own, a bit of self-care if you want. But if you up, you will literally do nothing but sit in your house, pay your gas and electric, and not even be able to drive your car at the weekends. And just like, thank you so much. Like, I hadn't thought about that. Like, I just thought I need to up my affordability, what I can get. And I was like, you're not going to enjoy that though. I spoke to you. I know that you enjoy going for trips with your friends. I know that you are really excited to buy a house because you'll actually be able to get a dog at that point, not like you are at the moment living in your mum and dad's house because they don't want one. So I know that what you want is so much deeper than that. When you go direct, you will speak to an advisor who will have been allotted. They will literally have a timetable that's been given to them to say, you are speaking to these 4 clients today. It'll take 3 weeks or more to get an appointment with that advisor. They only know that bank's criteria, and I don't want to say they don't care, they probably do care, but they get paid their wage regardless. Doesn't matter whether you go with that product or not, they will still get their 30, 35 grand, whatever it is, every day of the week because they're employed. The difference for me is I have had a bad experience. I do really care. I'm not on a standard residential mortgage, and it's important to me that I know that I've helped somebody. This is why I took the time on Sunday to speak to my cousin and say, as a veterinary nurse, what do you think these people are going to want to know? what is it that your people speak to you about, because she is a homeowner, so she does have staff and they do ask her questions, and travel was definitely one of them. Low incomes, temporary roles, there's a lot of things that if you go directly to your bank, they might not want those people as their clients. They don't want to lend to you for whatever reason. They may, but there might then be some really tight restrictions with that you have to have a 10% deposit. How likely is that? For some of the areas that some of you might be living in, it might just be really, really difficult to save that level. It could be that travel's an issue for them. I had clients, a lender who came back to me today to say the client lives 240 miles away from their office, and I said, no, that's the head office. They actually work at Manchester one, that's London. So, I know that. I didn't even have to go back to the client because I knew that information. So I get to know you guys. That's why I charge a fee, because I take that extra time. I don't want hundreds of clients. I want clients that I care about and that ultimately want to work with me and that we're aligned. So for me, I can't speak for any other broker, obviously, but for me, it's about having clients that I want to hold their hands all the way through to the end. And hopefully not just see them get the keys, but also hopefully get their letter when they fully redeem the mortgage at the end in 35 years and go, yes, I am no longer tied to a mortgage. And it could be that they've used Ruth, so they've got some fantastic investments and it's sooner than 35 years. But I would love to be that person that sends them that email going, oh my God, you've just paid off your mortgage. How amazing.
Oh, I have so much love for that, Serena, honestly. And we so appreciate as a community you taking the time to get to know us and understand us. And I think everything you've said there is so testament to the difference that it can make having someone on board that's in your corner. Because I can imagine when I came in to get a mortgage years back now, I only thought there was one place to go and I thought it was the bank. And if they'd turned me down, I probably would have just thought, well, that's it then.
Yeah, and that's what a lot of people think.
And it's reassuring to be able to hear that actually, maybe for those people that are lower income or they are a locum, or maybe there's something more unusual there, that there are people that are willing to go back and forth and help make that process easier as well, which I think if I was to learn one thing off that call, it would be sending all my friends towards a broker rather than just jumping straight towards the bank and so on. And sorry, Serena, I'll let you carry on unless you want me to jump in.
No, I was just going to say, well, we were discussing it earlier on, weren't we? Like, you guys yourselves will see all sorts of things on social media that people, all of a sudden, because they've got a dog, they're now a vet, and they'll be giving advice. And as we said earlier on, like, just because your friend bought a house 6 months ago, it's like this one time at band camp. They are not experienced. They do not know what they're talking about. I used to have it when I worked for the Department for Work and Pensions. Well, this is my scenario. My neighbour's exactly the same. Chances are they're not.
Yeah.
You need to treat yourself as an individual. You probably haven't told your mate that you've got a little bit of a missed payment or a default, or, you had a CCJ from parking. Everybody is so different. And that's why you want someone to take a fresh set of eyes. I do often get clients who come to me and go, I've been turned down by a couple already. Like, I went to my bank and they said no, and then I went to NatWest and they said no, and then I'm like, oh yeah, you do realise that the reason that they said no was because you've not been working at that place long enough. It was nothing more than that. Like, it's nothing, but they're not gonna go into depth with it. It's just, unfortunately, computer says no. Doing these online dips as well, which are heavily touted by the lenders at the moment. I see it all the time on YouTube, TikTok, Instagram, where they say, like, do a dip with us in 10 minutes. It's not the dip that I would do. It is not the dip that I would do. Like, it is so high level. And actually, if you read the comments, which, obviously I do because I'm interested, it does say, like, yeah, absolute codswallop, like, said I could have it, and then 6 months later I've just been declined and now the house is gone and we've just let the vendor up the garden path, etc. So bear that in mind. If it's short and sweet, yourselves, if someone's giving someone a solution that's short and sweet, Katie gave the one earlier on about a dog's ear, and knowing, like, further detail, like, yeah, you can put something on it, but what's going on underneath? They haven't looked in that dog's ear. We can only see high level. It is the same with this. So a lot of comparables, guys, but it's so true. You need to know more.
Definitely. It makes so much sense, doesn't it, when we've got those parallels? And we will talk about it at the end as well, but we can connect even anyone with Serena that is interested in taking that step. We've loved getting to know her more and love seeing the ethos that she's got, which is so similar to how we approach things in our profession as well, of treating everyone as individuals. And actually, this is a commitment for a lot of years, so we may as well take the time to set ourselves up with someone and something that means that we're getting the best deal for us, like we say, using that word best carefully. And I can see
I was going to say Alison's got a question.
So
Alison, I will only recommend conveyancers that either my client came to me with, like a previous client, and then it was a good experience, or one that I'd recommended to them and it's been a good experience. So I won't just go willy-nilly. For me, that I kind of probably have a small pool of solicitors. I would ask you, is it important that you can go to their office? If not, like, everything can be done online now when it comes to those sorts of things. But do you want to have one that you can drop in by? So someone that's local, or the ones that I would recommend, generally speaking, I also have access to all the updates. So if you have questions, for example, I can just jump on and go, right, we're here now with the process, so don't panic. I would guesstimate and I can answer all your questions. If it's one that you found maybe yourself, I might not have that relationship with. So it's sad that the one your broker recommended you're having issues with. I'd probably ask you to maybe contact me and or maybe elaborate on what you mean by issues. If it's they're being slow, they're all slow at the moment. So I know it's probably not the answer that you're looking for. You want me to be able to side with you here. But if it's a case of they're just being slow, then sadly that is really the case at the moment. My God, am I having to have my hair dyed a lot at the moment? I am grey, man, because it is so slow. I literally would really say it is taking up to 6 months now. We're getting to that point where I'm like, 2 weeks until the offer expires. Please tell me that we're going to get to completion. Your broker should be holding your hand. I mean, it's not part of our job. Our job is to get you to offer. But I would say any broker worth their salt would want to hold your hand until completion. And I keep in contact with most of my clients through Instagram, what have you. I'm like, where are we at with the house? Like, what's going on? So I do have a relationship with my clients, even now, for ones that completed 2 or 3 years ago, because I care about them. They become more like friends than clients, and the very least that they should be doing is holding your hand through to completion. So give them a kick up the tush, say to them, like, you recommended this person, I don't feel like they're doing a great job. And if they can then turn around and go, look, I feel like, honestly, hand on heart, you're just being a bit impatient, things are slow at the moment, and just take that as it's meant. Or it could be that they can pull some weight and say, look, we've been waiting forever, just give them a blooming update. If it's one that they can recommend, then hopefully it's one that they've got a really good relationship with. I hope that answers your question, though, Alison.
That makes total sense. And we've got another couple of questions. I've got one anonymous question and another one which I'll just read out as well, Serena. So we've got them for the recording too. The first one is,
sorry, I didn't think about that.
Oh no, it's fine. So if anyone is catching up, Alison said, how do you recommend choosing a conveyancer? I used one my broker recommended, but had lots of issues. How do you recommend choosing a good firm? Just so context for the last one. The next one that we've got in here is, I heard the 5% deposit scheme is ending. Does this mean that I'll have to be minimum 10% from October onwards?
So I will hold my hands up. That could be new news. If it is, I haven't had a chance to look at any industry emails that have come through today. I doubt it. It's probably what I would say. When the 5% went it was in 2020. I couldn't tell you what month. When they went, and then they brought back the new scheme, which was the government-backed 5% deposits. There were lenders that were throwing those products out before the government had signed it off. So I would say the government don't stipulate to the lenders how they do it. It's the lender's risk. So it's their legals, it's their compliance, it's their credit risk, it's all of their teams that make that decision for the lender. There aren't a lot of 5% out at the moment. You'd have to jump through hoops that then get set on fire, that then have a lie-in at the end of it. If you're wanting to get 5%, I would say at the moment it's not easy. It really isn't. And I'm not saying it's easy to save 10%, but what I do say to a lot of my clients is, and it's not where we want to be, but if you can ask anybody to potentially gift the opposite, then it's, who knows, you might have, I'm saying it, but I wouldn't have anyone that could do it, but there might be someone in your family who is willing to. It doesn't always have to be family now, that's something else to note. There are some lenders who will allow it to be someone that's close, essentially like a boss or an auntie. I know auntie's still family, but up to now it has been mum, dad, brother, sister. It can be grandparents, and there's like a bit more opening to that. There is one lender on the market that will allow you to have a loan, so it's really not worth the risk of trying to hope that that will be your lender. But I would say if you can get to the 10%, then do. I have a client who was getting the extra 5% gifted by her mum. It's taken 6 months and she's now not needing a gift because she's managed to save that 5% herself. So there is also that to look at. It could be that you're thinking, well, I can't afford another 5%. Well, if you've not put a full mortgage application in yet, you might have another 6 months after your full mortgage application to actually save another 5%. There are tiny little ways that you can save money. Ruth posted earlier on about it on Instagram with regards to fuel. There are all sorts of little side hustles that you can do that don't require you to have them registered with an accountant, because obviously if you're earning less than £1,000, then that £1,000 could make the difference for a loan to value banding. So it's important to think about it. Loan to values or LTVs, did it the other way around? They're not catching me out. It is the case of they start at 60%. They then crazily, for most lenders, jump to 70. Some are 75, then 80, 85, 90, 95. So they, once of a day, would make a massive difference on your interest rates. It's literally less than 1% now that it's making a difference.
Wow.
The life that we're living, well, the world that we're living in at this moment in time. Literally, it can be 3.95 for a 95% mortgage, and it can be 3.14 for a 60. It's not going to change much, I would say.
Wow.
But what it can change is, at the moment, what can change is if you're approaching the end of a fixed rate, for example, which was one of the questions I think we got asked about. That was Alison's question earlier on. I don't know if we want to cover that.
Definitely.
Time, I'm not sure.
Yeah, no, we've got plenty of time, I think, Serena. I think we've got a couple actually around sort of remortgaging, ends of deals. So I'll read you out quickly the one that's in the chat, and then we can come to Alison's question as well that we've got. So somebody's put, would it be worthwhile remortgaging a property that's been bought outright and has been let out to fund a buy-to-let? Where do I even start with this? I appreciate that's quite a complex
that one again, just the beginning, Katie.
So it said, would it be worthwhile remortgaging a property that's been bought outright and currently let out to fund a buy-to-let? If so, where do I even start with this?
So it would be a buy-to-let to purchase an onward buy-to-let.
Yeah, so it sounds like at the moment that it was bought outright initially. Can they remortgage that to buy another buy-to-let?
It depends. So I would say I'd need to probably know more detail about that one, because it could be that, well, it could be income driven. Is that property washing its face? What would the next one be doing? Yields are one of the questions that we're asked about. And I would say, probably get that person to contact me, and then we can look into it a little bit further. I'd be happy to look at that high level for them though.
Amazing. So if anyone does want to connect with Serena, just drop us an email, hello@betyou.co.uk, and we can make sure that we connect you up. And if you're going through that process of going to mortgage, you can explain fees. We'll pop a bit about that in the chat as well, but just so you've got a bit of an insight, top line as well. We do have right at the beginning, and then I'll come back to the other questions that are in the chat as well. We've got a question saying, I have a mortgage and I'm interested to know what happens if I want to move house in the future.
Okay. So this one's lender specific and product specific, but generally speaking, you might have the option to do what we call porting. Now, porting is very similar to like a balance transfer on a credit card, where you pick it up and you move it onto a new one. And it might be that the property that you're looking at, the onward purchase, is more expensive, so you would do porting and top up. As I said, I've got to caveat that though, that not all lenders, it's not always the lender actually, because sometimes it can be the product. For example, me being on shared ownership, I can't do that. That's not open to me, because it's so niche is the lending that I've got at this moment in time. The leads who I'm with do it, but not on my product. So it's something that you would want to look at your offer document for and to see if it's an option for you. But if you're on a really good rate, for example, you might want to port and top up, because you'll keep the product that you're on. Let's say you're on a 5-year fix and you're only 2 years in, so you'll keep that one, and the top up or the additional borrowing would then be on a new rate. So potentially you might save 20%. Not 20, well, you might keep what you've got, your 80% mortgage on that product, that really decent one that you probably got last year, the year before, and that was better than it would be right now. And then your new one, that extra 20%, for example, would be on a higher rate. That would be the reason that you would do the porting and top up, essentially. Plus, it might be that you've changed jobs, your affordability is less, you might have a bit of a situation that's less favourable. There will be a new application. So if you've got into serious hot water with regards to credit, then I would say it might be a case of just ride the storm. But again, that's quite specific, so just trying to generalize.
Thank you so much, Serena. Honestly, there's so much to this. I feel like I'm learning a huge amount, and I can see why it's been such a requested topic too, because there's so many different parts to it.
Definitely.
And I guess we've touched a little bit on remortgage there in general, like just to give people an idea, what actually is a remortgage? Why would they be doing it? What would it give them? What is it, just in general, for people that maybe already got a mortgage and they've heard of it, but like, okay, what does this actually mean?
So a remortgage can be mortgaging an unencumbered property, as mentioned just before, because it's got, you're putting another mortgage onto it, if that makes sense, where there wasn't one. It also could be that you've come to the end of your fixed rate, or you're coming to the end of your fixed rate, and you don't want to drop on the variable rate. It could be that you're not on, you are on a variable rate. That's happened some time ago and you've just dropped on there and not done anything about it. It could be that you've been on a tracker. There's all sorts of different reasons. But generally speaking, I would say 9 times out of 10, when I'm doing a remortgage, it's because someone's approaching the end of their fixed rate product. And they don't want to drop on the variable rate, because that's a very scary time. You don't know what you're going to be paying from month to month. And they want to lock in a new fixed rate product. Fixed rate products generally are 2, 3, 5, 10-year products. And the longer products are becoming much more appealing right now because of the interest rates rising.
Yeah.
You're locking in a rate for a longer period of time. But remortgaging just means that, generally speaking, you are applying for a new product. You're not necessarily changing anything other than that, although you can change things such as the term of the mortgage, so that's the length of the mortgage that you took out overall, rather than that 5-year product. It could be that you're changing from capital and interest to interest only, or vice versa. That's quite a niche one to talk about, but there's all sorts of reasons why you might do that, and a lot of reasons why you wouldn't do that. For example, it could be that you want to do some additional borrowing. So, for example, you live in a property. A lot of this happened last year, actually, and the year before, because people were at home. They couldn't afford to go on holiday. Well, they couldn't go on holiday, not that they couldn't afford to. And they were like, do you know what? We've been working in the spare room. We're going to extend the house. So they did additional borrowing to fund that, because an additional borrowing on a mortgage, generally speaking, but not always, is cheaper than, say, getting a personal loan or putting it on a credit card. So they did that additional borrowing and added it to the mortgage. Generally speaking, it would be a second part to your mortgage. So you'd have 2 parts of your mortgage. You'd see that on your credit report, but you'd also potentially have 2 payments running as well. And trying to think of any other remortgaging reasons. There probably are some, but on the spot, it's hard to think of them. But yeah, generally speaking, it's because you're approaching the end of your fixed rate. If you are approaching the end of your fixed rate, I would say always put a reminder in your calendar, because if you're anything like me, you will forget. But 6 months out, and I say a small number of lenders will allow you to look at moving at that point. The majority of lenders, though, will be 3 to 4 months, and there's some cheeky so-and-sos out there who will only remind you 1 month before going, well, hoping that you'll go, oh my God, I've not got time to do anything about it, I'll just have to stay with them. And that might not be the best option. You have the option to shop around. It's not worth staying sometimes. You are not rewarded for loyalty. Even if that's your own bank, for example, I bank with NatWest, I wouldn't get a better product just because I banked with them for years. They don't do that. That does not exist. That is a really common myth. And they don't often give loyalty rates for staying with them and doing what we call a product transfer. So when you do a product transfer, that means you stay with the same lender, and by a few clicks of a button, you just go onto a different product. It's still remortgaging, but it's just niched down to product transfer.
It's just a few clicks and a confirmation.
But you might not get the best rate overall for you.
And that makes total sense. I think one of the things that it took me quite a while to wrap my head around over the years was the like fixed versus variable, and realizing that it is as simple as it sounds. Like if you have a fixed rate mortgage for however many years, your rate of interest will be fixed. But like you say, if it's variable, 1 month you might be paying one amount, the next month it might be a different amount. And actually, again, like you say, if you come into the end of that and there is that risk of not knowing what you're going to pay, then having those reminders in your calendar and saying, look, this is super important, what's it going to cost me not to check this out?
Exactly.
Then
if you've used a broker and they're still going, I would say they're generally going to contact you. And you don't have to use them, you could use a different one. I contact mine and go, just so you know, heads up, your fixed rate's going to end in the next 3 to 4 months. What do you want to do next? If you want to tell me to sling my hook, that's absolutely fine. But if you want my help, obviously I'm also there as well. And like I say, the Bank or Building Society will remind you, but there are Halifax are definitely one who will let you run till the end of the 1 month before, because they know that you'll just go, I've not got time to sort this, I'm too busy, and you'll think, oh, I'll just go with them. Chances are, if you go to speak to a broker, a small broker, an individual like myself, you'll get an appointment that week. If you go to the lender, you might have to wait 3 or more weeks. And if you go to one of the free mortgage brokers, such as L&C, Trussell, Habito, you might get passed from pillar to post from a variety of different people. Obviously, you just speak to myself if it comes to me. So if you're in that boat and you think, actually, I could save some money here, I'm just not quite sure how, look small. The small firms, I'm not saying use me, but look small, because we will make time for you, basically.
Such a valuable insight. And again, for anyone that's maybe coming to the end and they are at a point of remortgaging, it might be that you're in the right place at the right time hearing this information as well. And we've got, I think, just one final question, then I'll start wrapping up, because I'm very aware of everyone's time. Is I'm going to change jobs, and I hope I have part-time job 3 days a week and a 0 hours locum roll once a week. Would I have to wait a year to have a 12-month history of 0 hours to be able to get a mortgage? I know that's quite specific again, but
maybe a bit too specific. And I'm trying to fully understand the question, but I think changing jobs so you will still have part-time income employed, is that right? But also doing the 12 months. So potentially you could do the mortgage off the part-time job. If that's going to still be employed. I am hoping I'm reading this, interpreting it right. So you could do it off the 3 days. But yeah, with regards to the 12 months locum, if you've not already been locuming, if that is a new thing that you're going to be doing, then you will want the 12 months. 12 months isn't all lenders as well. I have to be clear on that. It could be 24, some are even more, because it's not guaranteed, is it? It could be seasonal. There's all sorts of stuff. So 0 hours is everybody 0 hours. So not just this industry. There isn't subcategories for that. It's just 0 hours is 0 hours. That's how it's done. But I would say, if you're still doing part-time 3 days a week and that's employed, then you could certainly go off that. If you've got someone else that you're going in on the mortgage with as well, obviously you've got their income, you might not. You might be in my situation where it's just myself. So I hope I've interpreted that right.
Yeah,
but
they say you have.
Not perfect.
Yeah, they've just popped in the chat. Yep, that's correct. That's great. Thank you. And thank you for fielding that one, because I realise, again, quite often we've got quite specific circumstances for individuals in there as well. And I think you've covered so nicely there, Serena, like the process from the beginning to the end. You've managed to myth bust a few things along the way as well for us, and make sure we're jargon busting too. So we'd know where to start, and also understand a little bit more about remortgaging, a bit more about how that relates to our salaries, how much we might be able to borrow, and also maybe what order to do things in as well. So that's been super, super valuable. Thank you so much. Is there anything else that you'd add in there, Serena, as just last words from you for anyone that's sat on the session?
I would say if you've got questions, definitely feel free to approach me. I'm here to help. There is no silly questions, as we said at the beginning. I do give a lot of free, helpful tips and advice on social media. So if you're not quite ready, but you think you maybe want to sit on the sidelines, learn a little bit more, feel free to follow me on Instagram or Facebook. Everything I put on Instagram feeds through to Facebook. I'm not active on there. I don't even have the app on my phone anymore, but feel free to carry on getting educated. And also remember that things change. So just because you were told no before doesn't mean it's no now. And if you have got any credit, we didn't really cover adverts, but if you have got any credit history blips, as I like to sort of call them, then time is the best healer when it comes to that. Don't carry on burying your head in the sand. Get out of that situation in whatever way possible. I often get people simply just sending me an email with a copy of their credit report going, how do I look? Is this okay? And I will give them, some helpful tips along the way, how to get themselves out of the potential mess that they might be in. And I love it that 6 months later, I often get them back going, I did everything you said. I'm now ready to buy a house. And that is just so exciting for me, because it's not about the quick wins. It's about the slow burners that result in someone going, I had a really bad default 5 years ago, and I've been listening to what you've said on social media for 12 months, and I'm ready to approach you now to work with you. So they're the ones that, they definitely, I am a softie, they definitely do bring tears to my eye.
Oh, I love that. And Serena, just remind us, it's at the mortgage account, is that right?
Yeah, I'm at the mortgage account on Instagram, and I never bothered to change it on Facebook. It's still Mortgages with Serena, but that's my company name. It's just that you got to stand out from the crowd on social media, and hoping to help as many people as possible. Oh, we've got another question, I think, as well, Katie.
We do, if you've got time and you're happy to cover it.
Yeah, I'm happy. Yeah.
Amazing. We've got, if I'm employed and my partner is self-employed for 2 months, should I get a mortgage on my own or wait 12 months? Will he bring it up or down?
So I'm going to imagine the scenario, you both got good credit. If he has good credit and you want to borrow more, then you are better waiting the 12 months, because otherwise he might be seen, and I'm saying might underlined, written in bold, because every lender's different, but he might be seen as a financially dependent person on you, because he has no proof of income. Some lenders won't look at it that way, but some will. And also, if he's done 2 months, think about it this way. If you approached me today because you found a property on Rightmove, for example, it's going to be 6 months before you're able to get into that property. He at that point is 8 months in. Just wait a little bit longer. Wait a little bit longer. That 12 months could make a huge, huge difference. I'm obviously generalising here as well, but it could make a huge difference to what you can afford. If it's that you're wanting to buy because, let's say, for example, you're in rentals at the moment and you actually want to find your family home. Family homes, generally speaking, people are in those between 5 and 10 years. So don't just do a stopgap because you're wanting to get on the market. It's 12 months. You're not saying, like 2 years or 5 years. It's actually not even 12 months now. It's more like, in the eyes of the lenders, potentially, or starting to get the ball rolling, you're only thinking about 8 months away. It will take about a month to get your accounts done if you're using an accountant, maybe a little bit more. Obviously, it depends on how busy they are. But if you're wanting to buy more than you can afford on your own, then it's definitely worth waiting. good things come to those who wait.
Yeah, like you said, sometimes it's the long game, isn't it? And looking at that slower burn. And thank you so much for fielding that last one as well. And please do, honestly, Serena's got loads of content on social media. We've been having a look, and just a random fact for you, any Mrs. Hinge fans, Mrs. Hinge follows Serena and interacts with her content. So there you are. If anyone is aspiring to keeping the house as tidy as she does, I'm pretty sure I've not leveled up with that just yet, but random fact for you. And
massive fangirl for me. I was like, whoa, when it happened. So yeah, big deal to me. I'm not bothered if it isn't to anybody else. I'm a massive
I reckon there'll be plenty of people on here who that is a big deal to as well. So I just wanted to finish up by saying, first of all, a huge thank you, Serena, for your time. It's been fantastic. I think we've honestly learned so much. There's been so many insights and it's been brilliant. So thank you for stepping in and doing this. Again, thanks to Ruth for being here in the background in the chat as well and supporting so many members of the community, and to everybody else for being here and starting that journey, because that's exciting, you know, starting to take these pieces of action, starting to educate yourself. Using your evening to better your financial education really is investing time into yourself. So well done. And we've got lots of thanks coming through in the chat box as well, which is lovely. But I'd love to know what your key take home's been. If you do want to connect with Serena, please do drop us an email, hello@betyou.co.uk. Paul's dropped in the chat a couple of times a little bit around Serena's fee structure. As a professional, you've seen how much help and support she'll give you. And for that investment, looking at how much is going to be invested longer term into a mortgage really kind of puts that into perspective as well. So if you were interested in connecting with her, or if you've got any feedback or anything from the session, drop us an email at hello@betyou.co.uk and we can help you move forward from there. I know Serena does have a checklist of things like that if people want to start the ball rolling, but all the information we've kept popping in the chat for you too. If you do want to just talk more generally around your finances, investments, pensions, protections, any of the topics that we've spoken about, remember that Ruth always keeps a diary open for the VetU community. You've got the option to book in and have that introductory chat as well. Again, Paul's popped that in the comments for you so you can find that, and anyone watching on the recording, that will be in the email too. And don't forget, like, if there's anything else that we can help you with that you're like, oh my goodness, I just don't even know where to start, who to go to, just drop us an email. We'll see if we can signpost you to any of the people we've worked with previously, any of the previous presenters on the webinars, or even if we can look at seeing who can help you that maybe we've not worked with, because you know what, we're here to try and provide that hub to give you some guidance for the stuff that we've not been taught about, because you all work hard for your money. So let's make sure it's working hard for us as well. Next event is at the end of August. We've got Nicola from Harrison Co Accounts coming along to do us a session on how to run a side hustle, which is apt because Serena had mentioned that in part of the talk as well there. So we're going to be talking around what records do I need to be keeping? Do I need to be declaring things? Do I need to be registered as a sole trader? Like, we'll have all your questions answered. She'll break that down. There's always loads of information that we get from Nicola. She always does this really good sessions. So please do take advantage of that. Go and book yourself in. We've got a few more events the rest of the year. Always, as always, free to sign up. You can come along, you can digest the content and have your questions answered. So again, a huge thank you to everyone for being on here. We'd love to see you at the next session. And yeah, always know we're here in the meantime. So have a lovely evening, everybody. Thank you so much. And again, a huge thank you to Serena and to Ruth and Paul and to everybody that's been on here this evening. Thank you.
Thanks so much for having us.
Thank you.